Hey guys, Mike here. So another jam-packed video for you, and boy, we got a huge week coming up. I mean, it's enormous, jam-packed with earnings. I want to say it's almost like 30% of the S&P is reporting this week, and all the big dogs are. And then we got a ton of economic data coming out. We get to find out about basically the whole economic outlook of what we're seeing here, from sentiment to real estate to orders, everything. Okay, so it's going to be huge. And then I'm going to go into, something we ain't got to deal with for the next couple weeks, which would be nice. And then ask you, what am I missing here? Please explain to me something, because I keep hearing this narrative being painted by certain people. And I'm going to show you the data, and you tell me, what am I missing when it comes to what these people are talking about, okay? Because I value your opinion, and, I don't get offended if I'm wrong about something. And just do a quick house cleaning deal here. If you are signing up for the Patreon, remember, I don't just put stuff in the Discord, because a lot of people aren't Discord people. I put it on the Patreon as well. Make sure you check out one of those latest videos I did with talk about these market rallies and how to spot them and stuff like that, and see if this one has legs or not. And the other one was going to talk about this one right here. Get to know this leading indicator, because that is a huge one to know, basically, when we're pulling out of this thing and when we're going into recessions and downturns and things like that. It's a really good one. And please, dear Lord, I just put a video. I'm going to try to put the link in the bottom, but I put a video in the Discord, on the Patreon, everything else, and I will put it in the bottom, because this video is extremely important. If you have, especially a teenage kid who's like 16 to 18, getting ready to graduate especially, show them the video done by Ray Dalio. It's 30-minute long. It will tell you, you will understand more about the economy than I know I was ever taught in school. I mean, if I knew this stuff, that stuff he talks about at 18 or getting ready to graduate, oh my God. It's amazing. It's actually a very good video. Very entertaining, keeps your attention. But I'm telling you, they'll know, especially the credit cycles, how this economy actually works. It's right there. It's free. All right, I'll put the link down the bottom. If you remember, look in one of the two things as well. It's right there. I put it out there. That leads us into looking at what, I know I'm looking at this week. And we got the RSI broke over the 50. We're going to see if that stays bullish. We got the 50 and the 100 right above. And then that big gap right there never got filled. And plus, you got the golden pocket right there. So a lot of things ahead of us, and a lot of resistance if we are continue to move up. We're going to see, is it back tested that trend line multiple times and proceeded to move up. So we're going to see. But what's going to happen, what's going to cause this to go up or down, is simply earnings. Because earnings are just absolutely huge this week. Monday's not a big deal. I mean, you got Discover, so we'll see about us. And then we start kicking stuff off, right? You're going to have UPS, GM, Coca-Cola, Cleveland Cliffs, Halliburton, 3M, JetBlue. I mean, you name it, we're going to have them loaded. And then here we go. Microsoft, Alphabet, as you know, with Google, Visa, Chipotle, Texas Instruments. I mean, just enormous. And that, again, this is what's going to drive these markets. If they trip over the finish line, we'll see. Kraft Heinz, Hilton, are we still traveling? I got a story about that in just a second. Meta or Facebook, Ford, Teladocs, I don't care much about. I'm just curious to see. I don't know how I'm going to play. I'm definitely going to play something on that one. That stock's been killed. All right, Thursday, Shopify, McDonald's, Caterpillar, MasterCard, Southwest, Cameco is going to be a big one. And at the very bottom there, I almost didn't see it, right? Credit Suisse. Remember all the trouble they've been going through? We're going to find out a whole lot about that. And there's Apple, Amazon. Remember, Apple, 7.3% of the S&P. Pinterest, which was doing good, has been getting hammered since Snap reported. And then we come over to Friday. We already pretty much know what ExxonMobil and Chevron are going to say. They're making record profits, most likely. A couple more energy companies right there. And then going into economic data, it is loaded. I mean, this week is just absolutely loaded. And so you're going to have global manufacturing, global services PMI coming out. We roll down all about the housing, right? I think Tuesday or Monday, Tuesday, Wednesday, all about the housing. We're going to see how it's holding up or not holding up, as we will get to see more manufacturing data coming out. You can see the mortgages, purchase index, all that stuff, building permits. So we'll get to see. I mean, come on. Hit me up in the comments if you think that information is supposed to be good. I can't imagine at where rates are and prices that's even a good thing. I'm going to go into a lot about gasoline, crude oil. I think a lot of people will be paying attention to that. Thursday's a big one. Durable goods, GDP growth rate. That's going to be a big one, which will definitely shift markets one way or the other. We'll get to see on that. Friday, you're going to have personal income, personal spending month over month. Those are going to be big numbers to look at. More real estate, pending home sales coming in, Michigan consumer sentiment. Did it go up? Did it go down or stay the same? How are you feeling about the economy? That's really all you got to ask yourself. And another thing is, and this is why it's pure manipulation, Friday, when that Fed president was speaking was, and somebody pointed out in the comments, thank you very much, this is the blackout period, which guess what, started yesterday on Saturday. So the day after Fed President Dalio spoke and moved the markets up, now they're in the blackout window from Saturday up to November 3rd. And please hit that like, subscribe button, and share the video if you get anything out of this, guys. I really appreciate it. Isn't it amazing how that works? And it could be a coincidence she got rolled out there the day before the blackout, period started. Sure, I'm sure that's what it was. But again, earnings is going to see where we're going to go, guys. And then all the economic data. This is a loaded week. You can imagine volatility is just going to be all over the place. But I tell you what, you start seeing those stocks roll in, those airlines, are we traveling? Chipotle, we still eating in those restaurants, right? I think they're the biggest restaurateur out there, if I'm not mistaken. And then, of course, the big boys, Microsoft and Apple and all them reporting. They don't have, you saw Tesla. It missed on certain things and then went up Friday. It's just one of those things. They don't have to sit there and, kill it. All you got to do is trip across the finish line. It's all it's going to take, all right? But if they crap the bed, yeah, you can bet money the market may shift and head back down. And so it's something we got to watch out for. We will not have the Fed presidents for the next couple of weeks shifting things, narratives and all that stuff. They already put what they wanted to put out there, right? Which we'll probably do 75 basis points in November, and then from there we'll talk, right? Maybe we won't do the 50 in December. Maybe we do 25. The reason why it's being put out there is very clearly when you have the Treasury Secretary Janet Yellen coming out and asking banks, do we need to start buying bonds? Do we need to start buying the treasuries because they see a liquidity problem happening? That's why I think they got rolled out there and said, hey, we could be having a problem here, right? And so that kind of leads me into basically what I was going to ask a question about was, what am I missing here? Because I still see people coming out now saying, man, we're heading all-time new highs. The bottom's formed right now. We're in, boom, heading up and all this stuff. And I'm sitting there going, whoa, hold on a second. I just want to paint a picture for you real quick, and you explain to me in the comments what I am missing. Okay, here is the bubble. Here is this inflated move. We'll put on the Qs because everybody's buying into tech at this point in time. But look at this inflated bubble. Never moved this high since the dot-com bubble. Just this huge shot up from 2020 to the end of 2021, right? Now, of course, what caused this? Well, let's see. Here's what I think caused it. Put in the comments what you think caused it. I think it had to do with zero Fed's funds rate, first of all, so cheap or free money people could get, right? So I think that had a lot to do with it. Then I think the other thing is you got the total debt, right? The government spent literally from 23 trillion to 30 trillion, so $7 trillion. And that was in less than a year and a half. To let you understand how fast that is, we can scroll back and let's see how long it took. Let's see what we spent from, 2010 right there, 12 trillion right there, up to 2020, and we spent about, how long did it take to get to 20 trillion? 2018? So 8 years it took to get 8 trillion, right? And we did 7 trillion in a year and a half. So that ought to paint volumes for you. Then, of course, the Fed, their balance sheet doubled and went from 4.5 trillion to 9 trillion. They bought everything that moved, even corporate debt, by the way. Never happened in the history. But look at that. That's another reason. The other reason, which nobody talks enough about, is stock buybacks. 2021, a record 882 billion, a 69% increase from the 519 billion in 2020, and up 9% from the record 806 billion in 2018.
I'm just being truthful. I'm just talking.
And so how are we going anywhere close? And I'm sorry, don't ever forget 8.2% inflation and 6.2% core inflation. Don't let me forget about that right there. I hope those numbers are right if I remember correctly. But if that's what got us to that top, right, an all-time high, got the bubble up there and all that good stuff, then what now are people seeing that's going to push us back up there? I mean, what are we talking about here? Here's the Fed's funds rate over there, right? So 2.5, fixing to be higher than that when they do the raise in November. And then if you look, the balance sheet is actually shrinking. So the biggest buyer of bonds and mortgage-backed securities have withdrawn from the market, and they're letting them roll off their balance sheet. So you don't have that going on. And if that's the case, let's not forget, if you didn't know this, the biggest driver of stock prices, right, is sales growth. It's the growth. That's what we're paying for, right? That's at 10 years. But if you look at the beginning, 1 year, it's actually the multiple that actually drives the stock price 1 year and under. But then once you get past that, it is simply revenue growth, right? That's what's going to drive these prices higher than anything. That's what we're paying for. That's what we're looking for. And what are you seeing now? What did Netflix report? It was the lowest year-over-year growth ever, right? Everybody's saying, I mean, everybody knows it. Every time you go on an earnings call, their growth is slowing, you know? And so why are people still buying Tesla? Why does Tesla still have that base? Because they're claiming 50%, what are the year-over-year growth or whatever it is they're putting out there, but a huge growth rate. That's what we pay for in a lot of these companies is future growth. Well, if all of a sudden you're looking down the line for the next year or two and you're going, rates are high, the Fed's not buying a bunch of stuff anymore, the stock buybacks will still be there, the government spending is still going to be there, but nowhere near what it was obviously in 2020 and that crazy mess right there. Our savings rates are depleting at a really fast pace right now. You know, what do we got? So what can drive it? Obviously, like I said, the government will continue to spend some. They can buy goods and services, right? The Fed cannot. You have stock buybacks. That will absolutely continue. October 28th, I believe it is. You'll see it at full throttle. Okay. You'll have eventually at some point in time when the market does turn, margin debt, a lot of margin out there, unlike before. That'll be flying up, you know. But again, when you compare it to all this other stuff, I don't know. I must be missing it. You know, I'm not talking long term. I'm talking about, but people calling it like within the next like 12 months. Like we're supposed to be doing this. And I'm like, what? I know the market's ahead, you know, of the economic cycle and get all that, but you got to be kidding me. I mean, to drive to those highs and to maintain them, and then to go above it, there was a whole lot of cash being put in the market by the government. A lot. All right. And that's just not happening. Right. To me, we're back when I drew those trend lines and showed them to you, kind of back on this trajectory, not this trajectory, it's this trajectory. Right. So I can see us coming down. That's what made sense to me to hit this and then start that. But that'll take a while to get back to all-time highs. So, you know, I just saw that and I was looking at that and I was like, I got to put it out there. Let me get your opinion on it. I mean, let me know, like, when do you see us getting back to all-time highs and actually breaking the previous high? That's what I want to know. You know, let me know down in the comments and stuff. You know, because when I talk about rallies, I'm talking about bear market rallies, not going to all-time new highs and stuff. Not when you're seeing what's going on in the credit markets and debt markets and stuff like that. I mean, and what's going on in Europe. Look at Europe. Europe's a mess. They're looking for a prime minister now, right? I mean, I don't even get that. Like, how in the world in China, we all know what China is. We don't know the truth because what they do, they suspended or delayed their GDP numbers. We're talking about a communist country who could just make up numbers, and they decided to delay them. You know, when you remember when you were a kid, and this happened to me, I'll admit it, you know, and I failed, and I ended up getting like a C or a D on a report card. Yeah, I'll admit it, I hit it. Right? I mean, the only way you would do that from your parent or delay showing it to them is if it was something bad, because when I got really good grades or when you got really good grades, what'd you do? You couldn't wait to get home. It's like, look at this, Mom, look at this. And you sign this form and they go, oh, yeah, woohoo. You know, and so if GDP in China is that good, why are they delaying it? Does that make any sense? Right? I mean, the president was just reelected, if you want to call it that, for a third term. You know, and it's so funny, I read reports that they ordered firms not to sell stocks during their week-long meeting. Right? I mean, because they didn't want the market to tank over. Ain't that crazy? I mean, what a system, if that's true, which I can totally believe it. But, you know, I'm just saying, I don't get it as far as like within the next probably year, maybe even two, topping out and beating that new all-time high. I don't know. I just don't get that. But people are still out there beating the drum for it. Maybe they're right. I mean, hey, I'm not going to be upset if they're right because I own stocks. That's great. But it's just like, really? I mean, can that possibly be the case? So anyway, just want to put that out there to you. Hope you got something out of it. Hit the like, subscribe button if you did, guys. Feel free to sign up for that Patreon membership and stuff. And I'll see you tomorrow.